Hello, I'm Effie Pilarinu. I have a PhD in finance and 10 years of experience on Wall Street. My quantitative journey started with a math undergraduate degree and then a PhD in finance in the area of stock market returns and their chaotic behavior. My street journey started with a research position at Salomon Brothers in the fixed income derivatives area, and then continued at Bankers Trust in the Latin American emerging market, that is, debt area, and finally at SG Cowen in the area of local Latin American debt, spearheading the trading and investments in those local fixed income instruments. At the time that the Olympic Games were hosted in my mother country, Greece, I shifted and started working in a hedge fund, Dalton Investments, California-based hedge fund. And subsequently, I spent 3 years teaching at McGill University, options and real estate finance, right at the time that the subprime crisis unfolded and the real estate crisis happened. Hedge funds became extremely popular in the beginning of the 21st century, grew in size, and were more accessible to investors. The second and close large group of alternative investments is private equity and venture capitalists. And these were the chit-chat during the hot hour drinks at Silicon Valley when we had the dot-com boom. Distressed securities is another alternative investment that I'm familiar with because Dalton Investments ran a large hedge fund focusing on distressed debt securities following the Asia crisis of 1998, because there were a lot of opportunities to invest in that area. We will also touch upon the investment group of commodities and the derivatives linked to commodities, because they also qualify to fall under the category of alternative investments. And finally, we are going to describe investments in closely held companies or publicly traded companies with inactive shares. I'll also mention the real estate category that you're probably more familiar with, that falls also under the category of alternative investments. It is very important to realize that this mix, this list may change over time as there are new products that are developed because of the specific macro or business cycle needs of the investors or significant changes in the regulatory environment. The area of alternative investments may not be necessarily handled by large Wall Street firms. So therefore, the research and the trading and the investment decisions for these types of asset classes may be taken in specialty firms or boutique financial firms. So because of this, I view this online course on alternative investments as a preview for you into the broader financial job market. A typical MBA, a typical finance major thinks of an investment banking job or a stock analyst job. Once you hear and understand this alternative investments course, you will understand that there are other possibilities in specialty firms and boutique Wall Street firms that focus on some of these alternative investment ideas. Another way to look at this course is to think of the portfolio composition of a high net worth individual. Such an individual, a millionaire or a billionaire, will not only invest in stocks and bonds and exchange-traded derivatives, but will probably have significant allocations in these alternative investment groups. So a high net worth individual will have an allocation to real estate, to commodities, to exchange-traded funds, to hedge funds, to venture capitalist endeavors or private equity, and finally to distressed securities. So enjoy the tour of this online course and look for clues that may trigger your interest while getting to know the alternative investments area.